Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories in your favorite company's financial disclosures. And today we have General Mills Incorporated. And let me tell you, their latest filing has some juicy details about how they're handling their shareholders and their finances. Things get really interesting when we dive into the voting results. So buckle up before we dive into the numbers and the votes. If you love getting clear, no-nonsense insights from these corporate documents, make sure you hit that subscribe button, and for more exclusive content and to chat with us about these filings, join our Discord community. The link is in the description below. It is where the real magic happens. Alright, let's get right into it. General Mills Incorporated filed this report summarizing their shareholder meeting. That happened on the 30th of September 2025. Essentially, they retelling everyone how the shareholders voted on a bunch of important company matters. Over 461 million shares were represented at this meeting, which is a pretty significant chunk of ownership. Now, the first big item on the agenda was the election of their directors. Think of these as the people in charge of guiding the company's big decisions. For the most part, the shareholders gave a resounding thumbs up to the proposed directors, for instance, Benno. Dora received a massive 377 million for votes, with very few against votes. This indicates a strong level of confidence in his leadership. The same story plays out for most of the nominees, with very high for tallies and relatively low dissenting votes. This means the current board is largely supported by the people who own the company. Next up, we have the advisory vote on executive compensation. This is where shareholders get to say yay or nay to how well the top brass is being paid. And on this front, General Mills saw a good number for votes with 358 million in favour, but there was a noticeable opposition with about 22 million against votes. This often signals that while the majority is happy, a good portion of shareholders think the pay packages could be improved, or are perhaps not fully aligned with company performance. It's a signal that the board should pay attention to. Then we move on to ratifying the appointment of their independent registered public accounting firm. This is basically a formality to approve the auditors who check the company's financial books here. It was an overwhelming win, with a staggering 427 million for votes. This suggests that shareholders trust the firm that's overseeing the accuracy of General Mills' financial reporting. Now, things get a bit more interesting with the shareholder proposals. The first one was about disclosing regenerative agriculture practices within their supply chain. This is where shareholders want the company to be more transparent about how they source their ingredients and their environmental impact. And this one did not pass, with a majority voting against it. A substantial 271 million against votes compared to about 106 million for votes shows that this particular push for more transparency in sourcing was not successful. This time around, it's a clear signal that while some shareholders care deeply about these practices, the majority either doesn't prioritize it or is content with the current level of disclosure. Following that, we have another shareholder proposal asking to separate the roles of board chair and CEO. This is a common governance proposal aimed at creating a better balance of power and reducing potential conflicts of interest. Again, this proposal did not win the majority backing, with 243 million against votes compared to 137 million for votes. The shareholders have decided to keep the current structure where one person might hold both positions, at least for now. This indicates that the majority of shareholders are comfortable with the existing leadership structure. So, what does this all mean for General Mills Incorporated and its investors? Looking at the sheer number of shares represented and the overwhelming support for director re-elections and the auditor appointment, it is clear that the existing leadership has a strong mandate from a significant portion of its owners. The advisory vote on compensation shows a slight disconnect, suggesting there is room for improvement in how executive pay is perceived versus company performance. The failed shareholder proposals, particularly on regenerative agriculture and board structure, indicate that while these issues may be important to a vocal minority, they are not currently prevailing concerns for the majority of General Mills shareholders. However, it is important to remember that while the votes are tallied, the impact of these decisions or lack thereof will unfold over time. The company will continue to operate business as usual, and it will be up to the market and future filings to show how these shareholder sentiments ultimately translate into business strategy and financial outcomes. The lack of support for the regenerative agriculture proposal, in particular, might be a missed opportunity for General Mills to bolster its brand image in an increasingly sustainability-conscious market. The company is known for its many food brands, and consumer trust in those brands is paramount. Ignoring calls for transparency in sourcing, even from a minority, can sometimes lead to reputational risks down the line. In conclusion, General Mills Incorporated navigated its annual shareholder meeting with a generally positive outcome in terms of board and auditor approval. However, the mixed signals on executive compensation and the clear rejection of progressive governance and environmental proposals suggest a company that is comfortable with its current trajectory, but potentially overlooking emerging shareholder expectations. The real test will be seeing if and how this translates into future business decisions and financial results. What are your thoughts on these voting results for General Mills Incorporated? Do you think the shareholders made the right calls? Were there any surprises for you? Let us know in the comments below. If you found this breakdown helpful, give this video a like. It really helps us out, and subscribe for more deep dives into company reports. And don't forget to join our Discord. Thanks for watching. See you next time.